Asian stocks dipped Wednesday as Donald Trump threatened to raise tariffs on Chinese goods if the two countries do not strike a trade deal, with investors are getting more nervous as a December 15 deadline approaches. Earlier, it was reported that China's pessimistic about the trade deal. Meanwhile, the People's Bank of China cut its 1-year and 5-year loan prime rates by 0.05% each to 4.15% and 4.8% respectively. On the data front, Japanese exports fell 9.2% year-on-year in October versus the negative 7.6% expected. Against this backdrop, the Shanghai Composite was down 0.78%, Hong Kong's Hang Seng Index lost 0.73%. Japan's Nikkei 225 slipped 0.62%, and the S&P ASX 200 in Australia declined 1.35%. South Korea's Kospi shed 1.3%. Overall, the MSCI Asia ex-Japan Index gave up 0.66%. In Europe, stocks closed lower amid heightened trade uncertainty after Trump's threats. Also, the U.S. Senate unanimously passed a bill supporting Hong Kong protesters, and this step was disapproved by China's foreign ministry. Meanwhile, the ACB revealed its financial stability review. In the document, the central bank warned that excessive financial risk-taking and a slowdown in bank profitability posed substantial challenges to the regional economy. The Pan-European Stock 600 was 0.3% lower at the close. The U.S. markets dipped to their lowest lows on the day on Wednesday. The Dow slipped 0.40% to 27,821.09. The S&P 500 retreated by 0.38% to close at 3,108.46, while the Nasdaq Composite declined 0.51% to 8,526.73 amid the uncertainty around U.S.-China trade talks. In the latest trade developments, there were reports that Phase 1 trade deal may not be signed before the year's end. Earlier, Wall Street Journal warned of a possible impasse between the two countries. Meanwhile, the Federal Reserve released minutes from the October policy meeting. The central bank officials agreed that they likely won't need to cut interest rates further unless economic conditions change significantly. Most committee members saw these cuts this year as enough to support the outlook of moderate growth, a strong labor market, and inflation near the central bank's 2% objective. Also, officials see the downside risks surrounding the economic outlook as elevated. The dollar was slightly lower as the FOMC revealed its marketing minutes, with the Euro-USD trimmed intraday losses and finished at 1.1070, off the daily lows at around 1.1050 support zone. On Thursday morning, the pair is still trading with a bullish bias, but still capped by the 100 DMA, which continues to serve as the immediate resistance. Market focus now shifts to the ECB meeting minutes ahead of tomorrow's Eurozone PMIs. In commodities, crude oil finished higher on Wednesday, reversing earlier losses. As such, from a low of $60.30, Brent recovered to $62.40, as traders cheered the U.S. report that showed crude inventories grew less than expected last week and far less than a 6 million barrel jump reported by the API. The Energy Information Administration reported that U.S. crude supplies rose by 1.4 million barrels for the week, ended November 15th, and the fourth consecutive week of gains. The positive sentiment in the market was also due to the news from Russia. President Vladimir Putin said Russia and OPEC have a common goal of keeping the oil market balanced and predictable, and Moscow will continue cooperation under the Global Supply Curbs deal. As a reminder, OPEC meets on December 5th in Vienna, which will be the key event for the market until the end of the year. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.